Can we start once again, everyone? Now, so before break, we have discussed the entire concept of internal reconstruction chapter, understood the journal entries. Let us now apply the journal entry in the questions given. Okay, let us start with the question number 1. On 31st 12 2001, we limited at 20,000 rupees 10 equity shares as authorized capital, and the shares were all issued on which 8 was paid up. Correct? So 20,000 equity shares of rupees 10 each, in which how much was paid up? 8 rupees. In June 2002, the company in general meeting decided to subdivide its shares into two shares of rupees 5 with 4 paid up. Means one shares will be subdivided into two. So 10 will become 5 and 8 will become 4. Correct? In June 2003, the company in the general meeting resolved to consolidate 20 shares of rupees 5 each, 4 per share paid up, into 1 shares of rupees 100 each, rupees 80 paid up. Past entry and show how the share capital will appear in the notes to balance sheet as on 31st 12 2001, 31st 12 2002 and 31st 12 2003. Have you understood the question? Bolo. Means we are doing question number 1. What they have said, let us understand. This is 31st December 2001. 31st December 2001. Correct? Now, on 31st December 2001, there were 20,000 equity shares of rupees 10 each. Face value was 10, and what was the called up value? 8. Understood? Then it is given in June 2002, in somewhere यहाँ पर, in June 2002, they have subdivided, the company journal meeting subdivided, correct, each shares into two shares of rupees 5, rupees 4 paid up. Means can I say, they want to say कि each share has been subdivided, means 20,000 will become what? 40,000 shares. Face value will become what? What? 5, and called up value will become 4. Correct. And then what they have given next point, in June 2003, they will consolidate. They will consolidate. So they will consolidate 20 shares into 1 share. 20 shares will be consolidated. So 40,000 divided by 20, how much? Means now it will become 2,000 shares, and the face value will become 100, and this will become 80. Okay, this is a subdivision, and this is what? Consolidation. We need to pass journal entry for this. Let us pass journal entry. So we are doing journal. So what will be journal entry in June 2002? बताओ. Journal entry will be what? Equity share capital of rupees what? Of rupees 10, account debit. So how many shares? 20,000 into 8. Correct? 20,000 into 8 means 1,60,000. Will now become equity share capital. Equity share capital of rupees what? Of rupees 5. So whenever you are writing in bracket always write down face value. Correct? So now it will become 20,000, sorry. Now it will become 40,000 into what? 4. And you can see paid up capital remain same. So 40,000 into 4, and it will become 1 lakh 60,000. 1 lakh 60,000. Correct? Got it? Have you understood this point? We write down narration being 20,000 equity shares of rupees 10 each, rupees 8 paid up, correct, is subdivided into what? Is subdivided into what? बताओ. 40,000 equity shares of rupees 5 each, rupees 4 paid up. Got it? Simple. First journal entry understood? Correct. Journal entry is very simple. Now, narration I have just given big narration because this is only a 2 journal entry question. When we'll do long question, then we'll make it short. Okay. Being subdivision happen. Correct. We'll sort it. Don't worry. Correct now. But suppose you have time, provided you have time, you can write down entire thing. Correct. Then June 2003. Next year we need to do. So now share capital means equity share capital. Write down equity share capital of rupees what? Of rupees 5 will be consolidated into what? Correct. So equity share capital of rupees 5 means 40,000 into 4. 1 lakh 60,000 will be consolidated into what? Equity share capital of rupees what? बताओ. Of rupees 100. So now it will be how many equity shares? 2,000. So 2,000 into what? 80. You can see the paid up capital once again remain same. Paid up capital remain same. Return being 40,000 equity shares of rupees 5 each, rupees 4 paid up, consolidated into what? 2,000 equity shares of rupees what? 100 each, rupees what? 80 paid up. I have just given this narration so that you can understand my emotions. Correct now? What is going on? Correct. Now they have also asked the extract of notes to account. What you write down in the notes to account? Let us prepare notes. Notes to account. So they have asked notes to account for balance sheet. You can write down for balance sheet now. For 3 years they have asked. First write down as on 31st 12 2001. What was the position? Correct. So 31st 12 2001. We need to prepare notes to account for share capital. Share capital. So first we write down authorized capital. Authorized capital. So initially the authorized capital was how much? It was 20,000 equity shares of rupees 10 each. of rupees 10 each. Means this was how much? 2 lakh. You all know that authorized capital we will close it. It will not be added to the amount in balance sheet. Then we write down what? Issued, subscribed, and what? Paid up capital. So this was how much? 20,000 equity shares of rupees 10 each, rupees 8 paid up. And this will be how much? 1 lakh 60,000. Correct? And this will become total 1 lakh 60,000. Understood? Bolo? No doubt. Then coming to the next, as on 31st 12 2002. Once again we write on authorized. Can I say even the question is silent, authorized will also change. If the class of shares change, so automatically the authorized will also change. So now, what will be the number of shares? It will be 4,000. How much? 40,000 now. It will be 40,000 equity shares of rupees what? 5 each. So even the question is silent, you need to change the authorized capital by your own. Understood? To change the authorized capital by your own. So it will be 2 lakh. You can see it will remain 2 lakh only. It will remain 2 lakh. But you can't change the total authorized capital by your own. Correct? Then issued, subscribed, and paid up. This will be what? 40,000 equity shares of rupees 5 each. Rupees 4 paid up. So this will be 1 lakh 60,000. Total is equal to 1 lakh 60,000. Done. Last, can you do by your own? Understood? As on 31st 12 2003, do by your own. Fast. Done? Simple. One question we have done for subdivision and consolidation. Understood? Yes, sir. Let us come to another question. Correct? Question number 2. What is given? C Limited had rupees 5 lakh authorized capital on 31st 12 2001 divided into shares of rupees 100 each, out of which 4,000 shares were issued and fully paid up. So what they are saying? If they were 5,000 authorized capital, out of which 4,000 has been issued. Company decided to convert the issued shares into stock, but in June 2003 the company reconverted the stock into shares of rupees 10 each, fully paid up. This is, I will say, means not relevant concept for this chapter, but a specific question has been given in ICI study matter, therefore I am taking into consideration. What happens sometimes shares are converted into group of stocks, group of shares. I think in ESOP I said the group of shares is known as stock, correct now? So they will convert some group of shares into stock. So journal entry will what equity share capital account debit to equity stock account. And once they reconverted it, the equity stock account debit to equity share capital account. Correct now. So that is the case. I will not do, it is given in the solution only, you can understand. If 4,000 shares we have initially converted into stock, so what journal entry equity share capital to equity stock account? What is the amount? 4,000 into what? 100 means 4 lakh. And again that is reconverted into what? It is reconverted into shares, but shares of rupees 10 each now. Initially it was shares of rupees 100 each. So now they have reconverted into shares of rupees 100 each, means you need to, shares of rupees 10 each. So it will be how many number of shares? 40,000 shares. So journal entry equity stock to equity share capital, but the number of shares will change. Correct now. So this I am not doing in writing because this is specific question. If asked, you need to do like this only. Correct? Okay. This I hope you have understood from examination point of view. Coming next point, question number 3. ABC Company Limited had on 31st December 2007 80,000 equity shares of rupees 10 each, rupees 8 per share called up. In July 2008, the company decided to reduce it to rupees 8 per share fully paid up by cancelling unpaid amount of rupees 2 per share. So by cancelling the unpaid amount, this is what? Cancellation of uncalled capital. You are required to pass necessary journal entry and show how the paid up capital will appear in the balance sheet as on 31st December 2007 and 2008. Correct? Means what they have said, let us understand. We are doing question number 3. Correct. So what they have said, they were having 80,000 equity shares of rupees 10 each, rupees 8 paid up. So it will be how much? Without 6,40,000. 6,40,000. Correct. Then company decided to reduce it to rupees 8 per share fully paid up by cancelling the unpaid amount. So it means they will reduce it by 2 and this will become 8 and this will also become 8 and this will be 80,000 and this amount will remain same 6,40,000. Understood? So this is cancellation of uncalled capital already we have done. So what journal entry you will do batao? Yeah, no, not capital reduction account. In this capital reduction is not there. 6,40,000. There is no reduction, only change in the class of shares. Only change in the class of shares. Now 10 rupees now become what? 10 rupees now become what? 8 rupees now. But there is no reduction of paid up capital. You can see this remains same. This remain same. So what is the entry? What is the date? Understood. In June 2008, past journal entry. In June 2008, what is journal entry? Equity share capital rupees 10, account debit 6,40,000 to equity share capital rupees what? 8, 6,40,000 for it being 80,000 equity shares of rupees 10 each, rupees 8 were converted into what? Were converted into what? 80,000 equity shares of rupees 80 fully paid up, fully paid up. Got it? Have you understood? Bolo. Correct. Any doubt? Extract, I think you can prepare by your own. Correct? Chalo. This also you have understood. Now let us come to the questions from examination point of view. Correct? Come to question number 4. The following is the balance sheet of X Limited. Okay. Equity and liabilities, shareholders fund, share capital reserve and surplus, long-term borrowing, trade payables, short-term borrowing, bank overdraft, property, plant, equipment, intangible asset, non-current investment, inventory, trade receivable, cash and cash equivalent. What happens? Normally in exam, sometimes we don't read balance sheet, but and directly we come to the information. But sometimes what happens in the question in the balance sheet, they will provide some additional information which you do not. If you do not read, then eventually what happens? You may do some mistake, and that you realize when you will refer balance sheet. Correct? What I suggest that read the balance sheet very fast. Means just read the item, just go through that whether any information, hidden information is given. Sometimes they will provide some hidden information inside the balance sheet only. So start reading question but very fast. Correct? Then you can see they have given notes to account, share capital, equity shares, 10% preference share, reserve and surplus, debit balance. In this chapter always it will be debit balance only. Long term borrowing, 10% debenture, property, plant and equipment, okay, intangible asset, goodwill. So always you should give star mark to goodwill and what? Debit balance of PL account, because this need to be written off even if question is silent. This need to be written off even if question is silent. Correct. Now on the above date, company adopted the following scheme of reconstruction. In this chapter, normally we should pass journal entry. So first you read what is the requirement, give journal entry and prepare the reconstructed balance sheet. 99% they will ask journal entry. 1% rare chance is that they may ask ledger account also. In one of the exams they have asked ledger account. So most of the students what they have done, they have prepared journal entry because they are habituated of writing what? Journal entry in this chapter. Now suppose they have asked ledger account. Normally what we'll do, will not read the last information. We have got that question. This is very simple. We start with journal entry and then we prepare the balance sheet. We came to home, discuss with friend, then realize that it is ledger account. Your 10 marks gone. They will not give any marks even though your entire journal entry is correct, because they have required ledger account but you have prepared journal entry. So normally before reading just write down journal entry. Okay, thank you very much, journal entry. Then one all the points will have some journal entry, so we can read and we can write journal entries. Can we read point number 1 and do journal entries? Correct. So point number 1, the equity shares are reduced. Reduction, two shares of rupees 40 is fully paid up. The equity shares are to be reduced to shares of rupees 40 each. It should be reduced means you can see they have given equity shares of rupees 100 each. So it should be reduced to the shares of rupees 40 each, means how much reduction allowed? 100 will become 40, so 60 is reduction. Similarly, the preference shares to be reduced to fully paid up shares of rupees 75 each. So how much nominal value is given? Check करेंगे. Nominal value is given 100 and now it will reduce to 75, means how much reduction? 25. Can we do journal entry? Yes sir. Let us do the journal entry. We are doing question number 4. Books of which company? Books of which company? Yes sir. So I need to only inform you. Let us, books of which company, Baba? It is X Limited. Okay, sir. The books of X Limited. We need to pass what? Journal. So one by one we'll do journal. Yes, sir. We are ready. So point number one, can we start? So equity share capital reduced. But this reduction is with changing face value, without changing face value. With changing face value, because 100 become what? 40. So it is with changing face value. Understood. Understood. Correct. Write down. Equity share capital of rupees 100. Of rupees 100. Okay, sir. So how many? It is 20,000 into 100. 20,000 na? Sorry, 24,000 into 100. We write down 24,000 into 100. How much? 24 lakh. To what? Equity share capital of rupees what? 40. So this will be what? 24,000 into what? 40. That is 9 lakh. 60,000. Balance will be transferred to which account? Capital reduction account. Capital reduction account. How much? It is how much? It is 14 lakh 40,000. Got it? Very simple. Got 1 marks. Each journal entry will carry 1 marks. With narration you should write down. So now we write down short narration. Being what? Batao. You will say. Being. Very good. Equity shares reduced to rupees 40. Bas. Simple narration. Correct. Then we should pass for preference shares also. Same journal entry. So we have 10% preference share capital. So can we write down 10% preference share capital? 10% preference share capital of rupees 100 account debit. What is the number of preference shares? The number of preference shares 12,000. It is 12,000 into 100. It is coming how much? 12 lakh. Okay, sir. Correct. To what? 10% preference share capital of rupees 75. Yes, sir. Rupees what? 75. It will be 12,000 into 75. How much? 9 lakh. Correct. Okay, sir. To what? Capital reduction. To capital reduction. How much? It is 3 lakh. Correct. Yes, sir. Being what? Being preference shares reduced to low. You become expert in narration also. Correct, na? Yes, sir. Two marks you got. In this type of question, you can do mistake only when you are not reading the question carefully. Otherwise, mistake chances are less. Correct? Let us come to the another point. Point number one done. Come to point number two. The debenture holders took over inventories and trade receivable in full satisfaction of their claim. Means inventories receivable are taken by debenture holders in full satisfaction of their claim. Means let us find out कि what are the trade receivable, how much check करेंगे. So inventory 2 lakh 60, trade receivable 2 lakh 80, and we have debenture how much? Debenture how much check करेंगे? Debenture 10% debenture how much? It is 6 lakh. Correct? So what journal entry? You will give me the journal entry. Point number 3. 10% debenture account debit, how much? It is 6 lakh. What they have taken to inventories, how much? And to trade receivable, how much? Understood? Journal entry. The amount is given. How much check कर लेते हैं? It is inventory 2 lakh 60 and trade receivable 2 lakh. So 2 lakh 60 and 2 lakh 80. Total is coming how much? 5 lakh 40. The balance will be reduced to capital reduction. How much? 60,000. Okay, sir. Being debenture holders taken over what? Inventory and trade receivable. Simple. This also understood. चलेगा? Next point. What they have given? Check करेंगे. Point number 3. The land and building are to be appreciated by 30%. So land and building will be appreciated by 30% and plant and machinery to be depreciated by what? 30%. The land and building let us appreciate by 30%. So how much land and building check करेंगे land and building. So 12 lakh. 12 lakh का 30%. 3 lakh. So it will be increased by 3 lakh 60,000 and plant and machinery will be depreciated by how much? 5 lakh 40,000. Correct? Correct. We'll pass one journal entry for this. Let us read the entire point first. This you have understood. So you can see land and building appreciated, plant and depreciated. The debit balance of PL account and intangible asset are to be eliminated. Already I have said, even the question is silent, we'll do that point for goodwill and debit balance of PL account. An expense of reconstruction amounted to rupees 5,000. Correct? Pass journal entry. Let us do all the. So first we'll do for what? For appreciation of what? Land and building. What journal entry? Land and building account debit to what? Capital reduction. How much? 3 lakh? 3 lakh 60,000. Being land and building appreciated. Correct? Understood? Then, next journal entry. Can you see that? Then we need to find the, then we need to pass journal entry for reduction. So capital reduction account debit to what? To plant and machinery. How much reduced? 5 lakh 40,000. And can you see now we can pass one compound journal entry for each reduction of asset? Why to pass separate journal entry? So we know plant and machinery reduced we have done, and also goodwill will be reduced. So goodwill will be also reduced, and we have one debit balance of PL account that will be also reduced. That will be also reduced. Understood? Understood? We are passing one compound journal entry. So what is the amount of what? Goodwill. Goodwill is 90,000. So write down 90,000. And what is the amount of debit balance of PL account? That is 14 lakh. 14 lakh 40,000. 14 lakh 40,000. Being get rid of being losses written off. Small narration. Correct. टोटल बता दे 20 lakh 17 70,000. Okay. Only one last journal entry is left for what? Reconstruction expense of 5,000 paid. So what is journal entry for that? Very good. You have understood the chapter now. Capital reduction, account debit to bank, it is 5,000. Get rid of being reconstruction expense paid. Being reconstruction expense paid. Done. Got it. All points done. Now we need to think about which account? Capital reduction account. Whether it has surplus or deficit. It will have surplus balance or zero balance most of the time. Check कर लेते हैं. Let us start from the beginning. तो बताओ. Point 1 journal entry. It has a credit balance of 14 lakh 40,000. Then point number 2. Once again we'll add what? 3 lakh. We have added 3 lakh. Then point number 3. We have added 60,000. Yes sir. Then we have added 3 lakh 60,000. Then we'll minus what? 20 lakh 70,000 and minus then what? 5,000. So what is the surplus balance? 85,000. 75. 85. Mine also 85 coming. 85,000. That will be transferred to which account? No, surplus balance. I said it will be transferred to capital reserve. Check करो. No, check कर लो एक बार. Just check it ना. Last journal entry. Capital reserve. It will be transferred to capital reserve. So what journal entry? Capital reduction. Account debit to capital reserve. How much? 85,000. Very simple. Being surplus transferred to capital reserve. Done. Now you have done journal entry. Now balance sheet will not take much time. It will take time only for the format. If you know the format, it will not take much time. Only plus minus you are supposed to do. Can we do the balance sheet? The needful work need to be done. Correct. But let us check whether the capital reserve balance is coming same or not. 85,000 means we are doing correct. Yes sir. Chalo. Now let us prepare balance sheet. Now notes to account for most of the question you will do by your own. Correct now. Because in all question notes to account will be same only. And I said notes to account can be avoided in exam if time is not there. Maximum marks deduction on notes to account not given is what? 2 marks. So if you have less time, I will say better do some new question for that. So notes to account you can do by your own. Or you want me to do? In some question I will do. Okay, most of the question you will do by your own. So balance sheet. Balance sheet of which company? But now what you will add? And reduce. I have said now this point, and reduce. This is must to be given in exam. Must. As at which date? The all journal entry we have done in which date? They have not given. So we'll take this balance sheet date only. What is the date? Batao. It is 31st March 2001. We are on 31st March 2001. Okay, sir. So we'll start with what? Equity and liabilities. Then under this point number A is what? Shareholders fund. Correct. Then under this point number 1 is what? Share capital. So under share capital, now equity share capital, new equity share capital and new preference share capital will come. So what is the amount of that already we have written in the first and second journal entry? So what is the amount? It is 9 lakh 60 plus 9 lakh means 18 lakh 60,000. So can we write on 18 lakh 60? Full. So 18 lakh 60,000. Then point number 2 is what? Reserve and surplus. Correct. Can it's a debit balance of PL account written off, but now only one reserve, capital reserve. So in this chapter, at the end, only reserve and surplus, only one item will come, that is capital reserve. Most of the time, capital reserve is how much? 85,000. Got it? Done. Point number B, we write on non-current, but I think only one non-current liability, that is also now 0, 10% debenture. Just once check कर लेते हैं. You can see we have non-current liability. Under that there is only long-term borrowing, that is 10% debenture. Now it will become 0. We are writing directly what? 0. No need to write down. Then point number C, current liability. Let us check what is under current liability. So trade payable, no adjustment. Short term borrowing, no adjustment. So in these two, no adjustment. Write down. First we write down short term borrowing. And then we write down what? Trade payable. What is the amount of short term borrowing? It is 6 lakh and then 3 lakh. Correct? So it is 6 lakh and 3 lakh. Can you give me the total? What is the total of this? 28 lakh 45 45,000. Chalo. Then we write point number 2, assets. Under asset, first what we write down? Bolo? We write down non-current assets. Under non-current asset, first what we write down? Bolo? What do you write down? We write down property, plant and equipment. Huh? Plant and machinery. Fixed asset. The fixed asset has been amended. So now fixed asset and Under fixed asset, what we under fixed asset is not there, so we write on directly property, plant and equipment. Then intangible asset we write on, correct? Then we can write on property, plant and equipment. Bolo, can we write down? Yes, sir. We write on property, plant and equipment. Correct. So now what is property, plant and equipment? So we are having two property, plant and equipment. में there were two items ना. What are two items? Check करेंगे. So land and building has been increased by 3 lakh 60. So it will become 12 lakh plus 3 lakh 60. So 12 lakh plus 3 lakh 60,000. And plant and machinery will decrease by 5 lakh 40. It will be 18 lakh minus what? 5 lakh 40,000. What is the total property, plant and equipment? 28 lakh 20,000. So can we write down 28 lakh 20,000? Correct. Then now there is no intangible asset because goodwill written off. Correct. Yes, sir. And they have also given, I think, non-current investment, but non-current investment is 0. So non-current investment is also not there. Done. So this much only. Now coming to point number 2, current assets. When is the current asset? Inventory is taken over, trade receivable is taken over. So only what is left? Cash and cash equivalent. Cash and cash equivalent. So cash and cash equivalent, it is 30,000 and some amount has been paid, I think so. 5,000. So 30 minus 5 is how much? 25,000. Just check where the balance sheet tallied. It is 28 lakh 45,000 balance sheet will tally. Got it? What do you think? How is the chapter? Very simple. Now only whatever we are doing for practice. Some good question will not take simple question. What? Because if I will take simple to question, it is wastage of time in class. The first question I have taken very simple. Now whatever question I will take, some information will be tricky. Means once you understood the information, it is very simple. Means they will try to confuse you with the information only. And in information also English. English. They will try to trouble you in English. If you understand English, okay. If you do not understand, then also okay. Chalega. Correct. Okay. Take it. Okay. So what I will do today this much only. I'm not taking any further questions. Correct. What I want that you come by revision. You come by revision. Because why I am saying in this chapter come by revision? Because in this chapter my role is very less now. My role is very less. Now your role is more. Because every journal entry you need to frame. Correct? So your role is more, my role is less. Correct? Balance sheet also you need to prepare. What I will do in preparing balance sheet. Okay? So can I just give you one question as homework in this chapter so that you try without going through the solution? Okay. So can I give you one question as homework? If you permit me. Permission granted? Okay, so let me find out one easy question. But what happened? You said try. So I am not giving very easy question, but then also easy. Next question, question number 5. Question number 5 will be homework. Don't see the solution. Do by your own. And then after doing, just check it whether you have done correct or not. So of course, some mistake will be there. Some mistake will be there. When I am saying that don't talk, there will be some mistake. And if there is a mistake, it is good only because you will be able to identify, yes, there is a mistake. So it is very simple. Then also from my point of view, you will do some mistake. There is nothing to panic if you are doing mistake. Correct? We are born to do mistakes only. Correct? So for today, this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.